Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. Well, if you had to work today or you're a normal person, you probably missed the interview done with the Bank of Canada Governor Tiff Macklem, where he dropped a bombshell on reporters.
When we've talked to Canadians through surveys, when we've talked to Canadians through focus groups, what comes back very clearly is they like low, predictable inflation.
So Canadians like their inflation low. The internet went ballistic. I really hope this isn't how they actually spend their time in their focus groups. But in all seriousness, though, the Bank of Canada Governor Tiff Macklem did say that they are aware of the higher than usual inflation, and they're going to do everything they can to make sure they keep a lid on it. But it's not clear whether or not the Bank of Canada actually maintains the tools to fight the impending inflation, as we've seen this week and last week. That it's not just a matter of an oversupply of money. There are a number of factors that are causing the inflationary pressures that we're seeing. So what I want to do today is just briefly go over the press conference, what Tiff Macklem said, and how long he expects the impending inflation to last. And then I want to go over some of the other additional factors that I think could actually impede the Bank of Canada's attempts to fight inflation that really weren't mentioned, and I really expected the Bank of Canada governor to bring these up. We will have the weekly China update out very soon, as there's been quite a few developments there that could very well have a lot of impact on real estate prices and the inflation rate here. So make sure you click like and subscribe to get those updates. But for now, let's get into Tiff Macklem's interview. So aside from the breaking news that Canadians like their inflation low, the Bank of Canada governor said that they will be keeping an eye on inflation, and they're going to keep an extra close eye on wage increases. He says that since wages haven't increased yet, they're confident that inflation isn't spreading throughout the economy, and that it should temper and moderate over the next coming months. He actually put by the end of the year as his timeline.
Wages have ticked up a little bit, but wage growth remains moderate. And what we're really looking for there is that wage growth is in line with productivity growth, so it doesn't become an independent source of inflation. And so far, we're not seeing that.
So, good news, wages aren't increasing, I guess. In all seriousness, though, I did want to talk about his mentioning that they were able to handle the COVID crisis and the potential for deflation at the beginning of the crisis, and therefore they should be able to handle the inflationary crisis.
And I do want to assure Canadians that they can be confident that we will control inflation. We responded in force at the early stages, the acute stages of the pandemic, when the fear was deflation. And that has worked, and Canadians can be just as confident that we will keep inflation on our target over time.
I was astounded that there were not more follow-up questions to this statement. Obviously, yes, deflation was definitely a problem. People not spending any money, businesses closing, everyone in lockdown, etc., etc., etc. That was a big problem at the beginning of COVID, and really throughout, and could continue to be a problem to this day. There's been a lot of commentators out there that have actually said that the bigger worry is deflation right now, not inflation. Commentators like Kathy Wood and the like, who have talked about technological innovation, etc. But that's besides the point. They've talked about a deflationary spiral. And Tiff Macklem says that they were able to handle the deflationary pressures, no problem, so they should be able to handle the inflationary problems. The problem with that, though, is I don't want to discount what the Bank of Canada did, or what anybody did. Obviously, it was the COVID scenario was extremely new to everybody, and nobody really had a crisis like this before. But deflation really isn't that much of a problem. Very simplistic, but it's really not that much of a problem because you just print more money. If you're worried about the money supply shrinking, you increase it. Print money, and the Bank of Canada did. At one point, they were injecting over $4 billion in a week into the economy through its quantitative easing program. For its part, the Federal Reserve in the States has injected well over $1 trillion into the economy. You just hit the print button. It's a little simplistic, but nonetheless, it's quite easy for central banks to make more money. The problem they're going to have with the inflationary pressures that are coming is that how do you cool down an economy that you don't want to cool down? Right now, our unemployment rate remains right around 7%, when ideally, or in good times, we would see it around 3%. If inflation starts to go up while that unemployment rate is still at that 6-7%, the Bank of Canada is going to find itself very, very constrained in what it can do. High inflation combined with high unemployment and a shrinking or stagnant economy, that's stagflation. And the last time we saw that was in the late 70s, early 80s, and the only cure for it at the time was to raise interest rates well over 10-15%. And obviously you can imagine what that did to the economy. So when Tiff Macklem says that they're going to keep an eye on and they have the tools to fight inflation, well, I just don't know how genuine that he is on that. So, I mean, it's quite obvious to most spectators that the Bank of Canada is going to have a problem raising rates to fight inflation because, one, the country's in so much debt. Our consumer debt load, or the amount that we spend on our debt, servicing our debt, is more than any other population in the G7. Second, we're still trying to recover our economy. If our employment is at that 6 or 7%, and you raise rates, well, that's just going to kill business investment. And third, James Bullard of the Federal Reserve in the U.S. this week kind of let the cat out of the bag when he noted that even the Federal Reserve is having problems raising rates because the economy has gotten so accustomed to these low rates. And he suggested that they might even let inflation run even hotter. There's becoming more and more of a chorus out there that the central banks plan to let inflation run hot, mostly because they know if they raise rates to try to tamp down on that inflation, that we're going to have a problem with our economic recovery. And this wasn't mentioned at all by Tiff Macklem. So I think when he says that he's just that since they were okay dealing with deflation, they'll be fine dealing with inflation. I mean, that's just completely disingenuous at best, and outright lying at worst. And, also all of this is in the context of the Bank of Canada releasing research papers in the previous few months saying that they do plan on letting inflation run hot. So they know inflation's running higher, and they haven't yet said how hot they do plan on letting it run before they'll raise rates to intervene. So it's not clear how much that they even could fight inflation if they wanted to. And right now it doesn't even really seem that much, at least coming from the Federal Reserve, which obviously isn't the Bank of Canada, but we do tend to follow a lot of the lead of the Fed more often than not. So it does seem like central banks and the Bank of Canada does know that they're going to be letting inflation run in order to help with employment and stave off any economic downturns and keep business investment going. But that's not what he said. So I think that the press conference, it was interesting to hear that Canadians want low inflation. But in the end, I did expect him to kind of address the elephant in the room, so to speak. He just reiterated that they're keeping an eye on inflation, but didn't address really the main problems in the room that they would face should they try to fight off inflation. And it's not clear to me that they even have the tools right now to fight inflation with so many with the debt load so high, and with the supply chain problems, and soon enough the wage pressures, which I guess he did mention. But still, I would have expected more out of the Bank of Canada governor, and I guess maybe that's on me. With all of that said, the banks, you can always count on money to react. The banks have started to raise their interest rates up, so we will have some interest rate updates out throughout this month as they come out, and we're going to have some more updates on China and the rest of the real estate data as it comes out as well. Click like and subscribe to get those updates, and thanks for watching.